Right now, as we watch the markets unfold on this Tuesday, Ondas Holdings Inc., trading under the ticker ONDS, is commanding attention with a staggering upward move. The stock is currently trading at exactly $8.41 per share. That represents a massive intraday surge of $1.67, translating to a gain of 24.87% in a single trading session. When you see a move of this magnitude, nearly a quarter of the company's value added in a matter of hours, it triggers a very specific psychological response for anyone watching the tape. The immediate assumption, the expectation, if you will, is that this is simply another volatility play, perhaps a short squeeze on a small-cap tech stock or a retail frenzy fueled by chatter on apps like Robinhood or social forums. You might look at this green candle and assume it is fleeting, a temporary spike driven by speculation rather than substance. That is the expectation. But the reality of what is happening with Ondas Holdings today is significantly more complex and points toward a structural shift in how the defense and industrial sectors are valuing autonomous systems. This isn't just noise. This is a repricing event based on the realization that the company has transitioned from a developing concept into a commercially viable defense contractor in a world that suddenly desperately needs what they are selling. To understand why this move to $8.41 matters, we have to look past the percentage gain and examine the volume and the context. A 24.87% jump on high volume suggests institutional capitulation, not in the sense of selling, but in the sense of shorts covering and long-only funds finally stepping in after sitting on the sidelines. For a long time, Ondas was viewed purely as a speculative bet on railroad telecommunications, a sector that moves glacially slow. Investors using platforms like Interactive Brokers or Fidelity would often look at the balance sheet, see the cash burn, and pass. But today's action suggests the narrative has flipped. The market is no longer pricing ONDS solely on its rail business. It is aggressively pricing in the drone economy, and more specifically, the counter-drone security sector. When you compare this to the price action of something like Tesla stock in its early volatile days, you see a similar pattern. A technology that was once considered niche, suddenly finding its product-market fit due to external macro pressures. In Tesla's case, it was climate policy and battery costs. For Ondas, it is the rapid escalation of drone warfare globally that has turned their subsidiary technology into a must-have asset. Let's challenge the common belief held by many retail traders who might be eyeing this stock on their Robinhood app or through SoFi Invest. The general consensus is that small-cap drone stocks are lottery tickets, companies with cool videos but no contracts. The reality forcing this price up today is that Ondas is securing actual, deployment-ready contracts for critical infrastructure protection. The jump to $8.41 is largely underpinned by the market digesting the implications of their recent strategic shifts, specifically the massive $35 million investment into Performance Drone Works, or PDW, and the acquisition of Centrix. This isn't just R&D spending, this is consolidation. By integrating Centrix, Ondas now owns the capability to take over hostile drones electronically. This is distinct from shooting them down. It involves cyber manipulation of the radio frequency protocols to safely land a threat. In a world where airports and stadiums are terrified of stray drones, this non-kinetic solution is precisely what governments are ordering. That is the reality that is smashing the expectation of Ondas being just another money-losing science project. We need to step back and analyze what Ondas Holdings actually creates, because their business model is a hybrid that often confuses automated algorithms and Schwab intelligent portfolios that try to categorize them. Ondas operates primarily through two distinct segments: Ondas Networks and Ondas Autonomous Systems, or OAS. The network side is the foundation. They built a proprietary software-defined radio technology known as FullMAX. Think of this as a private, secure 4G, 5G network specifically designed for mission-critical industries like railroads and utilities. Unlike the cellular network you use on your phone, which prioritizes download speeds for streaming video, FullMAX prioritizes reliability and coverage over vast, empty geographic areas. Class 1 railroads in North America use this to monitor track health and train telemetry. It's a slow-growth, high-retention business. If that were the only thing they did, the stock would likely be trading with much lower beta, similar to a boring utility provider. But the explosive growth, and the reason we are seeing this 24% rally today, lives in the OAS division. This is where the company has aggregated a portfolio of autonomous technologies, including American Robotics and Airobotics. The crown jewel here is the Optimus system, which is essentially a drone in a box. Unlike a consumer drone you might buy on Amazon, the Optimus is an industrial robot. It lives in a weatherproof docking station, launches itself automatically, performs a patrol or inspection mission, lands, and swaps its own battery via a robotic arm inside the box. No human pilot is required on site. This is the holy grail of industrial drones because it removes the labor cost. If you're an oil and gas company or a port authority, you don't want to pay a pilot $100 an hour to stand in a field holding a controller. You want a system that wakes up at 2 a.m., inspects the perimeter for leaks or intruders, and sends you the data. ONDIS creates that full-stack automation. But let's look closer at the specific catalyst driving the volume we are seeing on Fidelity trading platforms and Interactive Brokers trading screens right now. It is the Iron Drone system and the counter-UAS capabilities. The geopolitical landscape has shifted drastically. The conflict in Eastern Europe has demonstrated that cheap, consumer-grade drones can disable multi-million-dollar tanks and infrastructure. This has created a panic among defense ministries and critical infrastructure operators. They need a way to stop these drones. ONDIS, through its acquisitions, now offers a hunter drone, the Iron Drone Raider. This is an autonomous interceptor that launches, tracks a hostile drone using AI, similar in concept to the vision systems used in NVIDIA stock or Tesla stock discussions, and physically captures the target or disables it. This kinetic capability, combined with the non-kinetic cyber takeover tech from Centrix, positions ONDIS as a complete end-to-end airspace security provider. The market is bidding the stock up because they realize ONDIS is no longer just inspecting railroad tracks. They are protecting airports from shutdowns and power grids from sabotage. This brings us to the financial reality, which is the tension point for any investor considering this for their individual brokerage account or Fidelity Iris. While the technology is impressive, the financials have historically been ugly, which is why the stock was trading so low prior to this move. The company has burned significant capital to acquire these technologies. When you look at the balance sheet through the lens of a conservative strategy, like those found in Fidelity Wealth Management, the cash burn is a red flag. But in the most recent quarter, we saw a massive surge in revenue, jumping to over $10 million from just $1.48 million in the prior year period. That is the inflection point growth investors look for. It signals that the technology has moved from the pilot program phase to the commercial deployment phase. The backlog has grown to over $40 million. This creates a scenario where the burn rate becomes less terrifying because there is a clear path to revenue scaling. The market is forward-looking. It is buying the 2026 revenue potential today. Now, I want to take a moment to gauge where you stand on this sector. The shift towards autonomous warfare and industrial automation is controversial but undeniable. Comment below how many shares of Ondas Holdings you currently hold, or if you believe the regulatory hurdles from the FAA will continue to bottleneck the drone industry in the United States. It's a debate that splits the community. Some see infinite scalability, others see a regulatory nightmare. Analyzing the microstructure of today's move, we have to consider who is buying. On a day with 24% upward momentum, you are seeing a mix of short covering and momentum chasing. Traders using Robinhood stock trading features are likely piling in on the breakout alert, while more sophisticated algorithmic traders on interactive brokers platforms are buying the volume-weighted average price, or VWAP, because the stock held its gains relative to the opening range. It's rare for a stock to gap up and hold. Often you see a pop and drop. The fact that ONDS is maintaining the $8.40 level suggests that buyers are absorbing the selling pressure from profit takers. This